Red alert, market takes a dive. Hold on to your hats, folks. The stock market is in a tailspin. It's a sea of red out there. Investors are hitting the panic button. Why? Let's dive in and find out. We're seeing a major market correction. This means stocks are falling from their recent highs. It's a reality check after months of gains. But don't despair. Corrections are a normal part of market cycles. The big question is, how long will this downturn last? Nobody knows for sure. But one thing's for certain, things are about to get bumpy. Remember those trade war fears? They're back with a vengeance. President Trump is set to slap tariffs on Chinese goods. He's calling it Liberation Day. But for investors, it feels more like doomsday. Tariffs are like taxes on imports. They make Chinese goods more expensive. This hurts businesses and consumers, and it creates uncertainty in the global economy. The market hates uncertainty. It thrives on stability and predictability. When those are lacking, investors get spooked. And that's exactly what's happening now. The bloodbath is widespread. All the major indices are down. The Dow Jones Industrial Average, the S&P 500, and the tech-heavy Nasdaq are all taking a beating. These indices are like barometers of the market's health. When they're up, it's a good sign. When they're down, it's time to worry. And right now, they're flashing red alert. The Dow is down over 2%. The S&P 500 has shed more than 1.5%. And the Nasdaq is leading the decline, plummeting by over 3%. It's a triple whammy of bad news. Tech stocks, once the darlings of Wall Street, are now leading the downward spiral. Tesla, the electric car maker, is feeling the heat. Its stock is down over 5% in pre-market trading. Tesla has been facing headwinds lately. Production delays, competition from established automakers, and concerns about CEO Elon Musk's behavior have all weighed on the stock. But Tesla isn't alone. Other tech giants like Apple, Amazon, and Facebook are also down sharply. The tech sector is particularly vulnerable to trade war fears, as many of these companies rely on global supply chains. Section 5. Global Shockwaves. Japan's Nikkei 225 plunges. The financial world is in turmoil, and the shockwaves are being felt across continents. The market turmoil isn't confined to the US. It's a global phenomenon. Investors around the world are on edge, watching their screens with bated breath as markets react to a myriad of economic pressures. Asian markets were hit hard overnight, with Japan's Nikkei 225 index plunging by more than 3%. This sharp decline is a stark reminder of the volatility that can grip financial markets. Traders in Tokyo were seen scrambling to make sense of the sudden drop, with many attributing it to a combination of global economic uncertainties and domestic issues. European markets are also in the red. The financial centers of London, Frankfurt, and Paris are all experiencing significant downturns. Investors in Europe are particularly concerned about the potential for a prolonged economic slowdown, which could have far-reaching implications for businesses and consumers alike. The STOXX 600, which tracks 600 large, mid-cap, and small-cap companies across 17 European countries, is down over 2%. This broad-based decline is indicative of the widespread anxiety that is permeating the markets. Analysts are closely monitoring the situation, trying to gauge the potential impact on various sectors and industries. The interconnectedness of the global economy means that what happens in one market can have ripple effects across the globe. In today's highly interconnected world, no market operates in isolation. A significant event in one region can quickly spread to others, creating a domino effect that can be difficult to contain. And right now, those ripples are being felt far and wide. From Asia to Europe to the Americas, investors are grappling with the uncertainty and trying to navigate these turbulent times. The current market conditions serve as a stark reminder of the fragility of the global financial system and the importance of staying informed and prepared for sudden changes. Section 6. Expert opinions. Analysts weigh in on the market mayhem. In the wake of recent market turbulence, investors and traders alike are seeking guidance from financial analysts to navigate these uncertain times. The market has been on a roller coaster ride, and everyone is eager to understand what lies ahead. So what do the experts make of all this? Well, they're divided. The financial community is buzzing with a variety of opinions, each backed by different data points and economic theories. Some experts are optimistic, while others urge caution.
Some analysts believe this is just a temporary blip. They see the recent downturn as a minor correction in an otherwise strong market. These analysts point to historical data showing that markets often experience short-term volatility before resuming their upward trajectory. They argue that the market is simply taking a breather after a prolonged rally. According to them, the fundamentals of the economy remain strong with robust corporate earnings and low unemployment rates. They suggest that this is an opportunity for savvy investors to buy stocks at a discount.
Others, however, are more cautious. These analysts are concerned about underlying issues that could have long-term implications for the market. They point to geopolitical tensions, rising interest rates, and potential regulatory changes as factors that could derail the market's progress. They warn that the trade war could escalate further, leading to increased tariffs and disrupted supply chains. This, in turn, could hurt corporate profits and consumer spending, creating a ripple effect throughout the global economy, dragging down global growth and sparking a recession. These analysts highlight the interconnectedness of today's global economy, where a slowdown in one region can quickly spread to others. They caution that the market's recent volatility could be a sign of more significant challenges ahead. They advise investors to proceed with caution. In their view, it's essential to have a well-diversified portfolio and to be prepared for potential downturns. They recommend focusing on quality investments and avoiding speculative bets that could lead to significant losses.
The truth is, nobody knows for sure what the future holds. The market is influenced by a myriad of factors, many of which are unpredictable. Economic data, political events, and even natural disasters can all impact market performance in unexpected ways. But it's always wise to listen to a range of perspectives. By considering different viewpoints, investors can gain a more comprehensive understanding of the risks and opportunities in the market. This approach can help them make more informed decisions and avoid being swayed by short-term market movements, and make informed decisions based on your own risk tolerance and investment goals. Ultimately, the best strategy is one that aligns with your financial objectives and comfort level with risk. Whether you're a seasoned investor or just starting, staying informed and adaptable is key to navigating the ever-changing market landscape.
Section 7. Gold fever investors seek safe haven as uncertainty reigns. Amidst the market turmoil, one asset class is shining bright: gold. As global markets face unprecedented levels of uncertainty, investors are increasingly turning to gold as a reliable store of value. The precious metal has long been considered a safe haven during times of economic instability, and its allure is only growing stronger.
The yellow metal, often seen as a safe haven in times of uncertainty, is surging in price. This surge is not just a fleeting trend, it reflects deep-seated concerns about the global economy. Investors are wary of the stock market's volatility, the unpredictability of geopolitical events, and the potential for inflation. Gold, with its historical reputation for stability, is becoming the go-to asset for those looking to hedge against these risks. Investors are flocking to gold as a way to protect their wealth from market volatility. The demand for gold is evident in the bustling activity at gold dealers and shops. People are not just buying gold bars and coins, they are also investing in gold-backed financial products. This trend is a testament to the growing belief that gold can provide a financial safety net in these uncertain times. They see it as a tangible asset with intrinsic value that will hold its worth even if the stock market crashes. Unlike paper currencies, which can be devalued by inflation or government policies, gold is seen as a stable and enduring store of value. This perception is driving more and more investors to allocate a portion of their portfolios to gold, ensuring they have a buffer against potential financial shocks.
Other safe haven assets, such as government bonds and the Japanese yen, are also seeing increased demand. These assets are traditionally viewed as low-risk investments, and their appeal is growing as investors seek to diversify their portfolios and minimize exposure to market turbulence. Government bonds, in particular, are favored for their perceived security and guaranteed returns. This flight to safety is a clear sign that investors are nervous about the future. The financial landscape is fraught with uncertainty, and the cautious behavior of investors reflects a broader anxiety about what lies ahead. As they seek refuge in safe haven assets, the movements in the market provide a telling indicator of the prevailing sentiment. The increased demand for gold, government bonds, and the Japanese yen underscores a collective desire for stability in an unpredictable world. Section 8. Don't panic, stay informed. It's easy to get swept up in the market hysteria, but it's important to remember that panic is never a good investment strategy.
Instead of making rash decisions, take a deep breath and stay informed. Follow the news, read market analysis, and talk to your financial advisor. Knowledge is power. The more you understand about the market and the factors driving it, the better equipped you'll be to navigate the ups and downs.
Section 9. Subscribe now for market insights you can trust. Want to stay ahead of the curve? Subscribe to our channel for daily market updates, expert analysis, and actionable investment ideas. We'll help you make sense of the market noise and guide you towards investment opportunities that align with your financial goals. Don't miss out. Subscribe now and join our community of savvy investors.